Want my latest market insights? My latest report, Recession Risk Just Got Pulled Forward, is now available. Scan this QR code or click on the link in the description. We had Oracle last night with a blowout, big, huge expectations about future revenue. Had a set of stocks soaring with big expectations that they're going to grow their cloud infrastructure revenue to 77%. Big numbers over the subsequent 4 years. And then this morning we have PPI coming in softer than expected. This is producer prices. Consumer prices tend to follow, usually, but not always. In this particular case, we have tariff sent the PPI strongly lower because demand fell. Tariffs, growth scare, all of that. So PPI can also fall when there is falling demand. And that can bring recession pulled forward, that expression I like to use. Pulled forward is right here, the question. What is it this time? Is it falling demand or is it deflation? So the bulls are going to say, yay, it's inflation's coming down. Let's do bigger rate cuts. And the bears are going to say, wait a minute, no. We've had this before. And it's a short-term deflation impulse on a growth scare. This very well could be the real effects of the tariffs that are starting to roll in that will hurt Q3, Q4, Q1 earnings. But for right now, that's not how the bulls are running with it. The algos are saying, hey, it's less than expensive, less expected, and stuff's going to get cheaper. That's going to make consumers spend more, et cetera, et cetera. We did gap up my ginormously on Oracle. Let me show you that one. Holy smokes. If I put this fib retracement, I can go all the way here. Look at this. And then I've got a double fib level about 326. Right now, it is above 306. So you see that? This is massively extended. So this is going to come up here into the 330 area, and I think that's where it hits its head for those who want to sell short or sell calls. This is definitely the area that I see it petering out. 330, 326, 27 area, 338, whatever. But it's right in this neck of the woods. And that is also an enormous extension from the mean. The mean right down here, the 10-month, is about 200 and it's printing 320. So this is a massive move. I've got this on a monthly and we're heading into this 326 area. It is literally 35% extended from its mean, the biggest ever. So careful on that. As it gets up here, very extended. We opened at 319 and trust me, they're going to take some profits off the table. That is a huge move for Oracle. Option market is lit, but this is a massive move higher. This was the channel before earnings. I said I have no edge with earnings. Well, obviously they are guiding hot fire flames and they're pushing into the potential of this double fib level, which is this 326, 7, 8, 9, 10, whatever. It's in this area. CPI is likely to be grinding higher. No big surprise. Energy costs have fallen. The lagging indicator of shelter, we're talking it's so lagging. It could create some volatility for sure, but for the most part, this baked in rate cut theme is already driven higher from PPI. We've got hell-bent on 6666, no shake and bake underneath the surface with option flow, with volume, with breadth right now. Could CPI interrupt? Sure, but I think this is kind of baked in bullish until FOMC on the 17th and then expiration on the 19th. I thought I would see a little bit more chop. Nope. All right, so all I have for you, like these bounce candidates here, and then they're a little extended and they have to go sideways. That's it. That is basically the area of digestion is up here in this 338-ish area. You can see resistance. That's all I got. On a chase time frame, it's very hard to believe they haven't taken some profits, but the others that are long and strong, they've got no reason to take profits. The market is still bullish. CPI could disappoint. We could come back in here. But again, for you chase time frame folks, 340, we hit 341, come back into 322, 322 breaks, we come back into 309, and then let's see. So we could have some shake and bake tomorrow, Phil, on that CPI. Option market is not showing it right now, but this is definitely a divergence. I know this sounds also very funny, but Oracle actually missed earnings, but their backlog is immense. And a lot of this is also tied in with OpenAI and NVIDIA. So we'll have to see if this holds up. But under the surface, I do want to kind of point out something. This chart is still bullish, but we will get a growth scare if we get continuation of this type of data. And by the way, Fed cares more about CPI than PPI, just FYI. But this tariff deflation impulse because of falling demand pulled forward recession risk. Remember how Apollo and Blackstone, BlackRock, whatever, they all came out and said, we're going to be in a recession. Okay, 90% odds. Well, okay, you need 2 quarters of negative GDP growth, and that's not what happened. That's not enough time, but that's what they were warning. Of course, PPI fell. This is not a tariff terror. We already know about it. We got all-time highs. So what the heck? So this is going to be a important metric for next month and the next month. See what happens with CPI tomorrow, but I'm not expecting a big surprise. Oracle was a big surprise. PPI weakness is to be determined. Big picture, looking for jobless claims to raise, to push higher. This Oracle expansion is really not normal. This is the mean right here. Literally, yesterday, the mean, and I looked at this after hours, the mean was 199. Let's call it 200. Now with the price on the monthly, the mean is 219. Let's take this 342 and the mean 219, and you get 36%, 35.96. Let's round up. It is 36% extended from its mean. Never has it done this. Look at this. It didn't do this back here in December. It didn't do this even back here in June of 2023. Never, ever, even back here in 2000. This is not normal. It is 36% extended from its mean. It also was last night. Even here, this whole 2000 extravaganza, this is where we're at. This is what it looks like to me now. This whole 2000 extravaganza. Right now, Oracle's kind of doing this 2000 vibe to me. And that lasted a while. That lasted right through until September of 2000. So Oracle is everyone's AI darling, and it put in an enormous 40% yesterday, which then caused the Goldman AI leaders basket to pop 10%. In other words, everything associated with the AI ecosystem, from semis to data centers, amen. It had its second best day in 5 years. So it was an outsized move. Now, it obviously sold off after it got all the profit taking kicked in. But basically, you have a situation where 30 or so AI stocks right now in the ecosystem. Okay, so 30 or so AI stocks in the S&P 500 have a combined 43% now of market cap. It just keeps going higher and higher. It's going to be like the Eiffel Tower at some point. And these names have driven almost all, repeat, all of the earnings growth since November 2022. What we have is still, however, a parabola of size, as an example in Oracle. We had lots of QE along the way, but it wasn't until this most recent AI extravaganza and Larry Ellison promising an enormous pull forward of growth potential, as in ginormous, huge dollar signs for the next 4 years. This is, of course, as I mentioned, this is not received revenue, it's expected revenue, but it's still a very big reason for the season of why the market exploded higher. They're also doing tons and tons of deals with OpenAI, 300 million, which of course OpenAI doesn't have any money like that. It has to get it from Microsoft and others. But the point is, this is all this closed loop that's still in play. Oracle, Nvidia, Microsoft, Google, etc. So they're still basically in it, the winner take all mindset, and that is what is propelling stocks higher. And this is what the result looks like. So chasing here is kind of unsafe in my technical view. You can't short a parabola, and it has just started. So this looks a little bit long in the teeth, but I would not be one who would ever short a Ponzi, recommend shorting a Ponzi, and or a very, very exuberant forward earnings extravaganza that may or may not materialize. So I'm not recommending that. However, we did talk about this yesterday for some chase levels. We're in this neck of the woods, and it came down from that kind of 340 into 322. Now it's bouncing above, and it's got to break this 322.50 to head down to 309, etc. But otherwise, as long as this backdrop of contained inflation, this AI drama continues, and that's all there's to say about that. So core goods versus core services inflation. Since we got a CPI print this morning, core goods, falling good prices were key, very, very helpful to bringing down that rate of change in inflation. And now they're going back up. And services is also no longer cooling. It's going back up. That's basically it in a nutshell. And that is what I expected. It increased as expected expected. But the bigger one is jobless claims. So rising jobless claims, 263,000 in September. It was estimated at 235,000. That's a 4-year high. It is not my 267,000, and I'm going to stick with that level. And I have stuck with that level. Do you know I have stuck with that level every single year when everybody else was like in 2022 and 2023, we're going to have a recession? I said, nope, actually we're fine. We had way too much money, and the stimulus creates this massive money supply, but we also had amazing driving higher policy intervention for leveraging all of this housing appreciation and car appreciation. And long story short, that stimulus was off the charts bullish for equities and trickle down employment. Now that we've got diminishing rate of return and we have no buffer in the labor market. So that's what I wrote about repeatedly. Again, in recession gets pulled forward, and then most recently recession risk gets pulled forward again. Remember this big one? Rate cuts into rising inflation, check. Rising unemployment, check. Labor market is cracking, I confirm, and this confirms again. I do think the Fed cutting 50 basis point means Fed admits imminent recession. They are not going to, they're going to do 25. So the market might have that surprise. Employment, inflation, growth event risks coming up. This was one of them. Today's jobless claims, which are now 263,000. Yeah, this is what I have seen for now over a year when I made the call in June of 2024 that this was going to get higher into the end of 2025, regardless of who won the election. Anyway, we're still in a situation where we have fiscal keeping things going a little bit, but we have to be very, very mindful that this is getting on fumes once those claims start to get and stay above 267. So I am still betting that the market raises up into that SPX 6666, and then we're going to get a jobless claim print above 267,000 that sticks. One of these weeks, we're going to get and stay above 267,000, and that's when I really believe volatility will enter the conversation. In the meantime, I still see lots of support, as I mentioned, until we get into this monthly expiration of the 19th and again the 30th. So markets bold up. Doesn't matter that Oracle is in nosebleed territory or whether the RPO estimates are BS. It is still all bold up, and the market likes it and does not want to price in anything bearish. And as long as the market doesn't want to price in anything bearish, it's bullish. It's really that simple. Until we get up to this 2.3 in my growth value rotation, and that is not today. We could actually go a little bit further, and that's why I keep saying hell bent on 6666.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.